Thanks for clicking. All eyes were on Finance Minister Chrystia Freeland yesterday as she was set to announce Canada's budget for 2023. While many were worried that any additional fiscal spending, government spending, could add to the inflation fire that has started to recede over the past few months.
Don't f it up now.
Others were looking to see if the government was going to include any new protections for Canada's banks in an attempt to protect Canada from what is happening right now in the US. We got our answer a little after 4 o'clock yesterday when Freeland tabled the government's budget, and as expected, the government did include some measures to help lower-income Canadians cope with inflation, but also included some measures for housing, though very little about the banks, beyond potentially increasing deposit insurance. So what I want to do today is go over the 2023 budget, take a look at its plans and their potential impact on Canada's inflation rate, take a look at some of the housing measures being offered by the government, and then discuss what to look for next. Speaking of next, it is the end of the month, and we are eagerly awaiting the release of March's real estate data from the local boards, which should start to trickle out early next week. We'll obviously have an update out on that data on this channel. Click like and subscribe if you want to get those updates, but for now, let's get into the budget. Onto the budget. One of the least surprising, as it was widely leaked, announcements coming out of the budget was that the government would be offering a grocery rebate for lower-income Canadians. Under the system, couples with 2 children will receive a payment of $467, a senior will receive $225, and a single person will receive $234. The one-time rebate will cost $2.5 billion and is expected to help upwards of 11 million families. The move is essentially a re-upping and a rebranding of the recent GST rebate boost, which began in November and saw a doubling of the GST credit for 6 months. And while the measure is intended to help lower-income households deal with inflation, an increase in government spending is almost by definition inflationary, unless it's accompanied by an increase in supply, a point which was made by Bank of Canada Governor Tiff Macklem back in February.
What did I say?
And while this isn't to say that the government shouldn't be helping lower-income households, inflation has obviously taken its toll, and no one wants to see anyone starve. This is only to say that an increase in government spending without an increase in supply is indeed inflationary. This will put upward pressure on Canada's inflation rate, though marginally. However, with the exception of the grocery rebate, there is minimal additional direct payments being made to Canadians contained in this budget. That doesn't mean that there isn't an increase in spending. Indeed, there is. The government plans on spending an additional $43 billion over the next 6 years, and will have a $40 billion deficit in 23-24, much higher than expected. However, the grocery rebate is really the only additional direct payment being made by the government to Canadians. It's really the only what Ben Bernanke would coin helicopter money being dropped on Canadians. With that said, the budget did contain some measures for housing, both for prospective and for current homeowners. The budget is set to deliver on the Liberals' much-touted First Home Savings Account. Under the program, Canadians under 40 can save up to $8,000 per year, up to a maximum of $40,000, tax-free, and use that money towards the down payment of their first home. I should note that although the government is delivering on the FHSA, a recent report showed that a large portion of the banks will not be ready to implement it by the April 1st deadline. So it will be law, the government will allow it, but depending on the bank, most banks don't have it ready as of yet. And although the FHSA will help those looking to buy their first home, as the CBC pointed out, there was very little in the budget to kickstart housing construction. Economist Armine Yalnizyan noted the surprise, given that Canada imported nearly 1 million people last year and is set to continue heightened levels of immigration. It's surprising that the government isn't accelerating the construction of affordable housing. However, there were some quasi-measures contained in the budget for those who are already homeowners.
Thank goodness.
The budget includes plans for the Financial Consumer Agency of Canada to publish a guideline to protect Canadians facing exceptional circumstances. The guideline will attempt to ensure that federally regulated financial institutions provide fair and equitable access to relief measures that include amortization increases, adjusting payment schedules, or authorizing lump sum payments. Now, the majority of the banks are already doing this, and we've talked before on this channel about amortization increases, and it's unclear as of yet how this guideline will be implemented. The budget does note that these measures shouldn't result in any unnecessary fees, interest charges, or penalties by the banks. And while it's also not clear whether or not this guideline will have the full force of law, It's also a far cry from the guaranteed mortgage deferrals that the Liberals had announced during the campaign, when they were touting a planned home buyer's Bill of Rights. With that said, I think the fact that these amortization increases were included in the budget, amortization increases which have largely helped out homeowners and also propped up house prices, shows that these increases, which the banks have been using to help holders of variable rate mortgages make their payments, do in fact have the full backing of the federal government. So, in summary, we do have a budget that is likely to contribute, though marginally, to Canada's inflation rate. But we don't see any massive, brand new initiatives that are likely to cost hundreds of billions of dollars. Kevin Page, a former parliamentary budget officer, said that with this budget, you can't really make the case that the government has loosened the purse strings all that much. We're seeing relatively modest increases. We are still running a deficit, a higher than anticipated deficit, and deficits in general do contribute to inflation. With that said, we don't have any massive, major new programs which are likely to send the inflation rate skyrocketing back upwards. We will continue to track Canada's inflation rate and how that budget does affect it on this channel. Click like and subscribe if you want to get those updates, but for now, thanks so much for watching.